All right, now we're back on the weekly trades recap. So last week we closed with minus 1.1%, if I'm not wrong. So we had two trades and we had few other, I'm not sure how many of them, but we missed entries on them because the price never actually retraced back. So I'm gonna just recap on the ones we actually took, and this was one of them. So the first trade we had was on Wednesday, so 9th of April. And let's see what happens here. As you may know that I have few models. One of the models is power of 3. So what I'm looking for, the power of 3, is pretty simple. I'm looking for supply or demand area, okay? And once the price reaches this supply or demand area, I want to see confirmations such as the power of 3. And in this case, we had this here, okay? So we've got this accumulation phase right here, all right? Then we got a sweep of these highs right here. So this was our liquidity, which was swept, okay? So this was our X, and we had a supply area right above this accumulation. So we had accumulation, manipulating this liquidity right here and reaching our supply area. And then we got distribution that created the market structure shift in this scenario. All right, so this is what we got. And I think we had our entry. Let's actually see because I don't remember. Okay, then we had our entry around this area using Fibonacci tool. Now, usually once I have the power of 3 model, I'm always entering from OTE, and I want to see either order block inside this OTE or breaker block, indecision candle, imbalances, any of this price action that's going to be within this golden area right here. So what I had above was this indecision candle, okay? And this indecision candle was already retraced back to. And the previous week we had similar example. So again, we had this order block right here, price has retraced back to this order block, and then we had another order block right here where the price came back to and started pulling back lower. So in this case, instead of entering from this indecision candle, I decided to enter from this 61% of my OTE and place my stop loss above these highs. So once I'm using an OTE, I'm always placing my stop loss above the highs because sometimes the market can even reach out into this supply area. And then we targeted this Asia low. Okay, now the reason for this was because, first of all, this is the lowest low. So the market has created highs and lows, and then we created a lower low instead of creating a higher low. So a higher low would have looked something like the price reaching this area without breaking this previous lower high and then pushing back higher. So it would have been something like this. And instead, what the market did, it continued lower by breaking this lows right here, creating this lower low. This is another indication that we are now shifting the market direction, even if it's for short term because we were overall bullish. Okay, so as you know, the market is made to actually fulfill inefficiency, retrace back before continuing higher. So catching these movements is actually very important. Okay, actually our stop loss was at this high. Okay, my mistake. So the stop loss was here because this area as an order block was already retraced to. So even if the price didn't respect the first order block, it would have retraced back to this original order block and then continued back lower. So in this case, I reduced the risk and had my original stop loss at this order block. Okay, so this was a nice 4 to 7 risk to reward. Now, of course, the reason for this target is because if we have an Asia high being swept, that means the Asia low is going to be resting as liquidity, okay? And we had a lot of imbalance right here, and we had imbalances even lower. So this was the target I was actually looking for. And what happened around what time? I guess around 12:15 we had news. So basically around here. And as we can see, the price moved back higher, took our stop loss, took this high basically. Okay, so we took this high, which was, let's say, sell-side liquidity, and then shifted back lower into our desired destination and actually taking this Asia low, which was our target. So overall, this entry was pretty good. The exit was actually good as well because we moved our stop loss back to, I think, these highs once we created another market structure shift to the downside. We decreased our losses to nearly break equal. And then what happened was that the price actually moved above us. Okay, so this exact price action is simply because of the news. And overall, in these 2 weeks, we've been seeing the market crashing down. So of course, this is going to show some effect on the Forex market as well. Okay, so in most conditions, we won't see this sweep of liquidity right here and then continue back lower. Mainly these areas are going to hold. However, we got this manipulation. So basically the price manipulated us, took us as liquidity, and then continued back lower. Okay, so this was the first trade of the week. Obviously, we closed it with nearly a break equal. So I consider this as a break equal or a 0.1% loss. Okay, so the second trade we had was on Friday. We had another trade before that, however, it went without us. So I'm gonna break this down and see what really happened right here. Okay, so we had a buy side liquidity being swept by these market conditions. And now another model that I have is I want to see the market creating basically pretty clear buy side liquidity sweep, take out some inefficiencies such as liquidity, but structural liquidity rather than higher time frame liquidity. So we've got structural liquidity being swept. So here's our liquidity being taken, and basically the market creating another higher high instead of pushing back lower from this area right here. We've got our buy side liquidity being swept, meaning that the market is now ready to reverse, because after liquidity is swept, that means the places where we have buy side and sell side liquidity are charging as support and resistance level as well. So once these areas are being taken, then the market may start retracing a little, reversing, or we can see indecision before the market continue in its original direction. So again, overall we were still bullish. However, once I saw this sweep of liquidity, this was my indication that the model is coming into an action. So again, we had imbalance above this area. So let's say here we had imbalance. Okay, I'll just draw it somewhere. It doesn't really matter right now. So again, I was expecting the price to reach back to this area. However, before it did that, this is the 3R model. It's formed only between 1 and 5 o'clock in the market's UK time. Okay, so this is the model basically. I want to see a buy side liquidity being swept. I want to see a structural liquidity such as X being swept, and then I want to see the market creating a market structure shift, and not just a simple market structure shift, but a clear market structure shift. So this is exactly what we got in this case. And usually in this model, we're always going to have some inefficiency above us, because the 3R model means we are, let's say, bullish, but we want to catch the retracement in this scenario. And this is why it's called a 3R trade, because most of the time, once we have this structure, the price always retraces up to 3R and then reverses back to take out the inefficiency, the supply area, or buy side liquidity that's resting above us. Okay, so in this case, we had all the confirmations, we had the high, we had the low, and then we got into a position right here. We had our stop loss above these highs, and again, we targeted exactly 3R. Okay, so this was a trade I was expecting, and yet this model has around 65% win rate. It's not gonna work every single time, especially in times like this where the market is so indecisive of which direction to move and basically in control of the government. And nothing is really in our control. The control now is on the government. So what's happening in the markets is not always going to make us happy. Okay, so overall, this is the trade breakdown of the other model we had. And again, instead of price reaching back into 3R, it continued this trend to the upside, taking out, let's say, the inefficiency and moved even higher. Okay, so overall, these are the two trades we took. For this one, we've hit our full stop loss, meaning minus 1%. Okay, and this is our trade recap of this week. Again, not our best week, and yet it could have been worse than what it has been. So I hope it was useful, guys, and I'll see you in our next trade recap.